Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself what is appropriate to you. Okay, so looking at our market today, we managed to reverse most of the sell down that we saw. So at this point of time, 7,200 is the level, right? We've come back down to this. We've tried to break it a couple of times, but it's like a magnet, and we're just holding around that level, and we're really just whipping around in a bit of a volatile nature. At this point of time, the sort of trends look like it's broken down a bit. Okay, so drawing in any sort of uptrend line long term now, you can't really draw it in without it being broken. Okay, so what does that tell us? It kind of tells us that something's changing here. Okay, we're either going to change into a downtrend for a period of time, or we could just be seeing a bit of a shallowing of the trend, and we're not going to really know that until we see where the bottom of this move is. Okay, so at this point of time, I'm kind of sidelining, you know what I mean, just sort of sitting and managing what I've got and just waiting for all of this to bottom out and break back to the upside again. I do believe the longer term trend is still going to maintain an upward sort of movement. Not much has actually changed for me here, but this is a bit of a correction we needed, right? At this point of time, we've corrected about what, 5-6%, okay, almost 6% there. There could be more in this, right? So it's not unlikely to see a 10% correction in markets. In fact, it happens almost once a year to get an 8 to 10% correction. And given the such strength we've seen, I'm not surprised if we do actually see a bit more downward movement from here. So really, like I said, sitting on the sidelines a little bit here, just waiting to see where the bottom of this move is. 200-day moving average is always a target. That's our next sort of level after 72. Clear through that, there's a bit of support and resistance near 69. Just below 69 here is the 10% level, which we rarely go past on a correction phase. So there's quite a few levels here. I couldn't really, I don't think anything beyond that 69 levels really on the table at this stage. A bit more downward momentum here is still on the table. I think, easily that 200-day or even close into 69s definitely on the table here on the next few weeks. There's quite a bit going on, which I'll scratch on in a moment. S&P 500 in the US, just to talk to that real quick. Nothing's looking bullish on this chart in the short term, guys. In fact, you've got a bit of a head and shoulders playing out up the top here. That trend's been roaring up for quite some time. So once again, a correction's on the table here, a good and proper one, right? So if I really take into account that head and shoulders pattern, guys, if I bring that down to the downside, it actually brings me the 200-day moving average. So look, for me, that 200-day moving average is on the table. Whether we reach that or not is going to depend on the flow of news over the next few weeks. And if we do see a couple more pieces of negative news, I think we could easily head back down there. So it's really going to come to news flow from here on where we find the bottom. We're not, as traders, we're not here to try and pick bottoms and tops, guys. Okay, we wait for the market to show us where the bottom or top is, and we trade accordingly. We adjust, we move trades around when we need to. Okay, so really in this phase now, you're either looking to go short or you're sidelining yourself until we start seeing a bottom, and usually they're fairly obvious, right? And we're not seeing that just yet. Okay, so first thing I'll talk about is the RBA. We saw an announcement from them today, a bit of a non-event as usual. They're sitting on their hands until at least February next year, where they'll continue to consider tapering their bond purchasing. So they're still purchasing bonds at a huge rate, guys. Okay, even though they've tapered once, they're still buying $4 billion a week. And they're going to continue to do that until at least the middle of February is what they've announced here. They're going to maintain their 10 basis point target for the 2024 government bond, okay, which keeps sort of rates near 0%. Okay, so that's all extremely accommodative. What they're really targeting, and I like these RBA announcements. They keep me fairly bullish to the markets, really. So they want to see actual inflation sustainably between 2 and 3%. They're basically ignoring this short-term burst of inflation that's being caused by supply chain issues, okay? Which is a good thing, guys, right? Because really that's always temporary. We're not seeing inflation because of high demand, guys. We're seeing, really, we're seeing inflation because of the supply chain and COVID issues, okay? So what they want and what they're going to stick to is a goal of getting the labour market back to where it needs to be, and also wage growth. Okay, so both the Fed and the RBA have talked about wage growth quite a bit, and wage growth's been a bit an issue for a long time, right? Even way before COVID times, right? We're talking the last five years or so. We've had a massive wage growth issue here. And in the US, right? In many countries around the world, wage growth has been very low compared to asset growth. So look, I'm glad they're targeting this, and I'm really happy that they're going to keep settings this low for quite a bit of time. What that says to me is we're not going to see, and they're saying this themselves, and we're not going to see an increase in interest rates until at least 2024. Right, so RBA has been very consistent in their messaging, and I think that's very positive for markets. It's very accommodative in a time where the government's pulling back the physical side of things. They've done their spending. They're very quickly going to stop spending. Okay, they're going to stop this $750 payment once we hit 80% national-wide vaccination rate. So you got money coming out of the economy that was driven into the economy through COVID. All that COVID spending and this extremely accommodative central bank setting at the moment should sustain the economy for a year or two here, especially if this vaccination plan works. So I'm pretty optimistic here, guys, right? I'm still pretty bullish the market and bullish the economy for the next year or so, given this extremely accommodative settings that we're seeing here, given that we're coming out of lockdown. Okay, vaccination targets are already being approached from a first dose point of view, which means our second dose targets are realistic. Okay, they're very realistic. So moving forward, travel stocks, even though they're probably a bit overbought right now, things that'll be something to keep an eye on. And that reopening trade, even though we've seen that exhausted a few times, I don't think it's over yet, guys. Okay, on the pullback that we're seeing at the moment, a lot of your industrial and mining stocks and things like that could easily rebound coming into next year. Now, obviously, there's a few things that are troubling markets at the moment, which I'll talk to in a moment. But really, the backdrop for me nothing much has really changed. I still think that with the extremely accommodative stance from the central banks, even though they're starting to turn the corner, especially the Fed, I can't see a lot changing. So just to scratch on the Fed, they are starting to turn the corner. They're talking about tapering as well. They should be tapering this year, and they'll continue to update us at the pace they're going to do that. The interesting thing is a lot of investors are worried that interest rates are going to go up soon, and that's on the back of inflation. And once again, I mentioned this before, inflation is high because of supply chain issues. Okay, it's not high because of this massive increased demand out there because everybody's rich and spending money. Okay, I don't believe that is the case. I think it's more a supply chain problem, which will be temporary, even if temporary means a year. Right, this inflation will come back down. Oil prices will get up to 100 and probably come back down to 50 again. They're the types of examples I'm talking about here. Yes, some things will always stay high in price once they've been inflated, but a lot of other things like commodities that can move around a lot. We've seen oil at 120 before, and we've also seen it at what was below zero. The oil futures went at one point last year, right? So negative futures, right? So things can move, guys, right? So I honestly think this inflation is temporary. Right? It could be a year before things really correct, but that for me it does not mean interest rates are going up. I can't see interest rates going up for quite some time. So one of the things that triggered some selling in our market today, and we saw, Japan down 3% at one point today. We saw the Dow futures down quite a bit at one point today, and they're back in the green now. Is this Evergrande stuff? Will they collapse? Right, they're on the verge. We're now seeing them go into a trading halt yesterday, and we're waiting to see whether they can come to some kind of merger agreement to get them out of this. Okay, otherwise, they probably will go into liquidation. That is, basically the debt that they hold is about 2% of Chinese GDP. That's a huge, put into perspective, it's a huge amount of debt, guys, owned locally and across the world. So we don't really know what the flow-on effect would be if they did collapse, right? I think it's going to be one of those things where it's going to cause a bit of fear. You'll get a bit of volatility around it, but it'll get priced into markets pretty quickly, right? So look, that's just one of many things that are creating some uncertainty in the market right now. So, this is the thing with markets, guys, all right? Equities markets. We can price in bad news pretty quickly. We can price in good news pretty quickly. But how do you price in uncertainty? And this is where markets can whip around in a very volatile manner for a period of time. All right, and the period of time is really dictated by when these things get resolved and when markets can find out and get rid of the uncertainty. Sometimes it doesn't matter if it's good or bad news at the end. Right, so Evergrande collapsing, by the time it actually happens, you might see the markets go up because the markets have been so uncertain and sold down so much on the back of that news that the markets will be relieved to know what the outcome is. Okay, so just keep that in mind in all of this. All right, sometimes it doesn't really matter what the outcome is. It's just getting rid of that uncertainty off the table. So the US debt ceiling, we've got part of that kicked out to December, but obviously they could still default, right, coming into the 18th of October. What a government default means, we're not 100% sure. It could be pretty drastic, but I don't think anyone has historically pushed it that far. This is a political game. Right, it's just a political game. They obviously both sides are at it, trying to get Biden spending down. Okay, he wants to spend $3.5 trillion. The Republicans don't want him to spend that much. This is an excuse to fight him on that and bring that spending amount down. The markets like physical spending, right? The markets are going to love Biden getting this through. What they're not going to like is the tax rate going up and the amount he's spending going down. Okay, it's money coming out of the economy. We want to see money come into the economy, guys, right? That's a big thing for the stock market. Money coming into the economy, whether it be monetary stimulus or physical stimulus, the markets love it, okay? So this is a big thing here, right? Biden spending on the back of this debt ceiling issue, it's all combined together. We're just waiting for an outcome. Whatever that outcome will be, depending on how much the market has already fallen, it might just jump straight back up, okay? So the whole budget plan, let's just see how this plays out. They have to do something by the 18th of October. I don't think they're going to push it past there. I think we'll have a resolution within the next week. And like I said, it doesn't matter what the resolution is. If the market's sold down, will probably pop up not long after they've announced what they're going to do. Okay, so yeah, as you can see, I'm probably more medium to long term bullish, aren't I? Right, short term, big question mark. I just don't know where the bottom of this selling is going to finish. Either's on the table. We could either find the bottom here, or we could come off another 2 or 3% quite easily, right? So don't have a crystal ball at this stage. We've just got to wait to see where investors are comfortable to get back in. I do believe there's a lot of money on the sidelines. Okay, waiting to come back into the equity space. Just waiting for the timing. So just to finish off around the COVID side of things, so obviously at the moment it's all about vaccines locally. VIX hitting 1,700 cases a day. That doesn't really matter as much as what it used to. Unfortunately, I know it sounds strange and I know it sounds daunting for a lot of people out there. From a market standpoint, it's all about the vaccine number, right? If we are hitting our first dose targets, okay? New South Wales is almost 90% first dose. VIX 82% first dose. What that means is we're going to hit that level of second dose very shortly as everybody gets their second hit, okay? They've reduced the Pfizer wait time to 3 weeks, okay? A lot of people in that 40 and under age group are going for the Pfizer vaccine, which means a lot of that age group are going to get their second jab very, very quickly after their first. So to hit that 80% mark, really national-wide, it shouldn't take long, guys, right? We're already almost there for first jabs. We're 79.61 first dose for the whole eligible population of Australia. Okay. So yeah, we're on our way, okay, and what that means is more freedoms, more movement. With Morrison dropping that 750 a week payment once we hit 80% double dose, means that the states are going to be forced to stop this border control stuff, right? They're going to be forced to start reopening. There's going to be a lot of interest in getting immigration back and people traveling in from overseas, okay? Because we need jobs. We need all these tourism jobs and other jobs to reopen again because no one's supporting these people, okay? So look, I know I'm not talking to what I feel about the situation, guys. I'm talking more about what the market's going to do in the situation. Okay, the market likes reopening regardless of what happens. Okay, this reopening trade's gonna kick back into gear if we can get Biden's stimulus plan approved and pushed forward. Should see a kick back up in commodities, and hopefully then also a kick back up through the industrial stocks like CSR, James Hardie, that have all been pushed down a little bit recently. Finish off on China. Obviously, this Evergrande stuff is putting a lot of question marks up around China's growth in the residential real estate space. That's also puts a lot of question marks around commodities in general. Iron ore's obviously been smashed down to just a bit above $100 US at the moment a ton. China's closed this week. Dalian futures, the iron ore futures are closed this week, so there's no leads coming from that space. Okay, so really, we'll see a true market next week, guys. When China reopens, when we start to see some resolution to the US debt ceiling issues, when we start getting rid of a few layers of uncertainty, then we'll see the real market, and I think that real market's going to be pretty bullish. Okay, but yeah, look, it could be a week, it could be 2 weeks. Last thing I mentioned before I tune off is around the 13th of October, around the middle of October there, US reporting kicks in. After the last reporting, with a lot of uncertainty on supply chain issues and COVID numbers, which were increasing at the time, a lot of people dropped their forward expectations on earnings. Therefore, there's a high chance we'll have another beat earnings expectations season, right? It's their end of year, so you see a lot of full year reporting happening here. So it's going to be a very important time for sentiment over that second half of October as we see that US reporting. That also coincides with some of our banks reporting that happens right at the end of October as well, and we'll see a lot of quarterly reporting from our miners here too. Okay, all right, so I'll leave it at that. A lot going on through the rest of this month. As I said, we're just going to clear away some of these bits of uncertainty, and we'll probably find the market will rocket up pretty quickly. All right, I'll leave it there. Thanks for listening. I know this is a bit of a long one, but there's a lot going on out there at the moment. So, yeah, I won't apologise too much for that, but have a great week, and bye for now.